afternoon. Thanks for tuning in. You're watching our Speak You on Bloomberg Quint Live. I'm Navneet Saluja D'Souza.
Hey Navneet, I'm Alex Matthew. If you've got questions on equity, then you can send those queries to us on Twitter, Facebook, YouTube and WhatsApp. This is the show that gets you all the answers. You can also call us on 022-4540-4141 or you can mail us on askbq@bloombergquint.com, as some of you have already done. Only make sure to add the AskBQ hashtag.
Okay, before we get to the individual queries on the show, let's also tell you what's happening with the markets right now. I think they're off the day's high that we've seen. We did have a positive start coming by, but Nifty as well as Sensex, both of them are right now trading just mildly in the red. But remember, Nifty is off almost 25 to 30 points from the highs that we've seen during the day. Even Bank Nifty, that was seeing a lot of action, at least on the future side. We had seen a lot of traction with regard to OI build-up, but Bank Nifty has also come off. It's down almost 30 points right now as we speak. The broader markets have also come off the day's high. Last when I checked, they were still trading in the positive territory, and yep, they are outperforming the benchmarks. The market breadth was pretty good in the first half, but I guess it's deteriorated a bit. It's almost 1:1 as we speak. As you can see, the gap has contracted a bit. The Nifty contributors list will tell you which are the stocks which are dragging the index lower. So the list is being dominated by most of your heavyweights like HDFC, Reliance Industries, SBI. Though these stocks have not fallen too much, but they're trading in the negative territory. Probably that's the reason why the index is flattish. Some support coming in from the heavyweight ITC, one of the top gainers in Nifty. GAIL, Infi comes out with the numbers today, so keep an eye on that one alongside TCS. Let's see how the numbers pan out. But before that, Infi at least is trading mildly in the green. In terms of sectoral gainers today, you've got the likes of FMCG, Realty, Media Indices. All of them are registering good gains as of now. Media Index is up almost 1%. On the losing side, your biggest laggard is the PSU Banking Index, followed by metals. Remember, metals was down yesterday also because of stocks like Vedanta and JSPL, which were trading in the red. Quickly, let me take you through a couple of individual stocks which are moving around. 63 Moons, a beaten down counter, has been locked in upper circuit, up 20%. It's also a volume gainer. If you look at the volumes, it's almost 25 times the volumes that we've seen in the last 1 week. Gati is up 13%. That's a day's high, remember, and it's gone up on very, very high volume. So watch out for this counter. And besides that, your other high beta counters like Infibeam, PC Jewelers, these stocks have been moving around in the last few days. And today also we're seeing good moves. Jain Irrigation is the other one in that list, which is up almost 3.5%. On back of some brokerage notes, we're seeing moves coming in for stocks like Havells, which has gone down. You've got Credit Suisse, which has downgraded the counter to neutral and cut the target price to 780. Some bit of impact maybe because of the report. And the other one is Motherson Sumi, where HSBC, they've maintained the rating, but they've cut down the target to 170 from 233 earlier, citing reasons that the car sales have slowed down, probably because of which the volumes could be impacted going ahead.
All right, let's also take a check on how the European markets are panning out. Let's pull up some of those indicators onto the screen just before we get our experts in for the day. Well, you have a fair bit of mixed trade as indicated by the early signs that we saw when the Asian markets opened up. Of course, we had a bit of a mixed trade coming overnight as well from the US market, so not too surprising by the numbers that you can see on the screen. All right, with that, let's get our two experts in for the day. Sharmila Joshi, who is an independent investment advisor, and Vikas Jain of Reliance Securities. They're both here to answer all of your questions. To begin with, Sharmila, we've got quite an interesting question. And this is a mail that was sent to us by one of our viewers, Muiz Ansari. And he's written us a question with regard to a couple of FMCG counters. He's holding about 1,100 shares of Future Consumer at 55 rupees per share and 150 shares of HUL at 1,700 rupees per share. I understand that he wants to hold both of these for the long term. And what he's essentially asking, I think he's following up on the kind of strategy that most people have been advising in this sector, which is to sip into these counters. Which of these two counters should he pick up for the long term?
That's the name of the first stock. The second is HUL and the first is?
Consumer, which he bought at levels of 55. If I'm not mistaken, it's currently trading around the 40. Future Consumer.
Future Consumer.
It's currently trading around 44.7, up about 3.7 in trade.
Between the two, I prefer HUL. I think if you had to do an SIP in a stock, it would be an HUL if you are a longer term investor. because I think these sort of blue chip FMCG stocks they may rise slowly, but they do tend to reward long-term investors. So I think between the two, I definitely prefer HUL. I think future consumers, even in terms of the price that it's trading at, is way above its valuation. It is just that there is always some buzz around the stock, and so if you're that tracking news and who's really buying stocks because they're news based and is going to be very active in the stocks, then I think you can look at future consumer. But if you're really a sort of a retail long-term investor who just quietly wants to invest, then I think HUL is the stock for you.
Okay, Sharmila, I just want to add one more stock into the mix, since the first question on YouTube from Shivakumar is also in the same space. He's asking about Marico. He's planning to buy for the long term. Would you recommend getting into this counter as well?
Which is at Marico?
Yes.
I'm not too sort of in favor of metal play at this point in time, because that again is sort of moving with overseas. One day you hear about US China reaching some kind of an agreement, and metal stocks seem to rally, and then again you hear some other bad news coming either out of Brexit or from that is actually what is really dictating that whole space. Domestically, I think things are okay. Demand is fine. Also, the government has taken a lot of measures to actually protect prices for the metal producers. So I would think it's an avoid for me for now. Unless if you have it, then hold it. But I really wouldn't recommend a fresh entry into any metal play. And for Hindalco, between Nalco and Hindalco, but Hindalco, there has been that issue. So you really need to let things get that sort of full feed of what has happened in Jharkhand and then take a call on that. So
Sharmila,
I will just wait for now.
Sharmila, all right. So I believe there's a bit of an issue with our connection. So I believe you heard Nalco when I meant Marico. We'll try and connect again and ask you the same question again. In the meanwhile, let's take a short term.
Yep, and we're getting a lot of queries with regard to the FMCG stocks today. So Vignesh on YouTube, he wants a technical view on Britannia for the next 6 months, a company which is now in the Nifty index as well. So let me go across to Vikas and take his view. Britannia, by the way, right now is almost a day's high, up 1%. But Vikas, if I look at this counter, it's not done too much on year-to-date basis. On the fundamental side, valuations always remain an issue with regard to FMCG companies. But if somebody wants to take a view from the next 6 months horizon, what would you suggest?
Well, if you look at, no doubt, yes, as Saluja, you said, the stock has underperformed in the last 3 months. But we believe that now the stock is ripe for an up move, because the whole FMCG basket has been looking pretty good. The FMCG sector has been pretty good, and Britannia have been added into the Nifty. You should have a lot of Nifty individual ETF funds been buying into the stock. The stock has seen a good amount of bottom formation near to those 2800, 2750 odd levels. And we believe the stock is ripe for an up move. So we can see an up move extended up to 3250, 3280 from the current juncture over the next few weeks. And if that is being crossed, then we can set higher targets near to those 3450. So it's a clear-cut buy at current levels. If somebody wants to initiate a stop loss, no doubt, then he can place it near to those 2730.
Fantastic. All right, that's a view on Britannia. That closes that out. Let's take Lohit Dare's question. He's got a question on persistent systems. Let's pull up the chart. And in fact, let's pull up a slightly longer term chart to just show you how the stock is done. From what I can see, around the September or just before September, it was trading around elevated levels of 900, and then it had a steep fall. It's currently trading around 615. We've got Lokesh, who's gotten at levels of 647, but he's only got a short-term view, so he has to recover some ground. Vikas, on the charts, is there any indication as to whether it will reclaim that 647 mark, and what are the levels that you would watch out for?
Well, the stock is a major underperformer, and despite the whole IT sector setup rally, the stock has been consistently underperforming. So we believe the stock would continue to see some more amount of pain. No doubt, the stock has seen a good amount of sell-off from those 680, 685 levels, so some amount of pullback cannot be ruled out. So you should keep a straight stop of around 595 in the current structure and wait for some pullback near to 645 to 650 and exit the position.
Okay, last 3 months, persistent is up almost 12 to 12.5%. I think we've got Sharmila back on the line. Sharmila, let me revisit the earlier query which our viewer had on Marico. Just wanted to get your view on that one. Do you like Marico or no?
Well, yes, I think Marico is an alright sort of a stock. I think the concern is for me is that it's a sort of a single brand play. So I think from that perspective, perhaps I prefer a Dabur because they have more brands and the space that they are in and the kind of presence that they have. So between the two, again, I would prefer a Dabur. But if you're invested in Marico, I think you can continue to stay invested.
If you're invested into Marico, you can continue to stay invested. But Sharmila says she also likes Dabur in the FMCG space. Okay, guys, just a request. If you're sending your queries, just send one query at a time so that we can accommodate a lot more queries from people. Faisal on Facebook, he wants a view on Tata Motors. He's holding 2,000 shares at a price of 252 rupees and he's got a time horizon of 1 year. We've seen Tata Motors moving around in the last few sessions. In fact, it's broken out of that range of 200 now at 215. Sharmila, very quickly, a counter which has not moved in the past but now has shown some sort of moves in the last few sessions. Somebody holding at higher levels like 250, what would you suggest?
I think, you wait now and you wait for the numbers because, I think the way the stock really corrected and made a sort of a bottom was post its Q3 numbers where they took that impairment loss in China. So I think let's see how the numbers come in this time and then take a call. But in a sense, the stock has already rallied from the low it made. But let's just wait for the numbers since we are in the earnings season and then take a call from here. So for now, it's a hold.
Okay, let's pull up Radico Khaitan. We've got actually a lot of questions coming in the recent past about this counter. It's underperforming a little in trade today, about 3% lower at 358. We've got Anurag Agarwal, who's asking for a short-term view on the stock. Vikas, on the charts, it's not doing too well in trade today, but are there any prospects for a run in the short term?
Well, it's not doing well since last many days because the stock has broken critical averages on the downside, and we believe the stock would continue to see some more amount of underperformance. So unless until the stock crosses its short and medium term averages near to those 345, 350 levels, the stock would continue to see some more amount of pain because we believe the stock has seen good amount of sell-off and the sell-off would get extended more beyond near to those 280, 285 levels.
Okay, one more short-term query coming in. Let's just pull up the charts of persistent systems in the meanwhile. Oh, we've done that?
Yeah.
Okay, I'll move on to something like Arvind and Kitik's garments. Then Arun Kumar on YouTube, he wants a longer-term view on these stocks. He's not mentioned if he's already taken any exposure. Sharmila, from a longer-term time horizon, would you recommend buying into Arvind or something like Kitik's garments?
In that Arvind space, I prefer the Arvind Fashions stock. As you know, the stock has now sort of demerged into 3 entities. And within those entities, I prefer the fashion because, that's where they have the brands and where you can expect that consumption story to drive it further. So that would be the stock that I would look at. And I'm afraid I don't cover Kitek's garments.
Okay, fair enough. In fact, since we are talking about Arvind, and Sharmila has indicated that she likes Arvind Fashions, just by the way, but we've also got a short-term query on Arvind Limited. Because on the charts, we're looking at Arvind at close to 90 levels. What would you recommend for the short-term? Anshul Goel is asking.
Well, the stock has made a decent bottom near to those sub 73, 75 levels and seen a good amount of pullback. We believe the stock is just able to cross its critical average of 100 days and then see again a strong move. So a breakout above 93, 95 levels should see the stock heading higher near to those 100 and 101. So the stock should face some amount of time-wise correction and head for higher further levels. So the view is bullish on the stock.
Okay, that's a bullish view technically coming in on Arvind. Interesting question coming in from Ganesh, who writes to us on YouTube. He's asking, are there any companies where revenues are annuity based with steady margins that our experts can suggest? So Sharmila, is there any company that strikes, that pops up on your radar with regard to, where their revenues are annuity based and the margins historically have been steady?
Historically, I don't know, but I think the the first companies that come to your mind are obviously the REITs companies. So because their income will be totally annuity based. So I think those could be 2 stocks that could be looked at. But the thing is, they don't have like a real large history in terms to compare margins, is what I'm trying to say. But their income will be largely annuity based.
Oh, yeah. So, well, that is the idea. They haven't taken off in a big way, have they, Sharmila? I was still waiting for scale to really come into the space. Real estate investment trusts were supposed to be the answer to a lot of problems in the real estate space, especially with regard to investments into commercial. Do you see that panning out in the near future, or do you think that you would have to wait for a while before you actually take a bet on this space?
Well, we've had really only two issues. We've had rights and then we've had a recent listing. And I think the second one is more sort of commercial property based. So I think there you could possibly see income sort of go up and, they'll be making fresh investments. So let's hope like that is the start. And yes, I think probably, ever since they've been launched, one would have expected more to have gotten launched and more to have been done in the space. But I think over the next 2 or 3 years, once people start seeing the performance of these, possibly you will find more people encouraged to come to the market.
Okay, let's move on and take some more queries coming in. Rakesh Arora has written to us and he's asking which is a better investment option between these two stocks, Varun Beverages or Jubilant FoodWorks. Sharmila, I'll come back to you. What do you think? Where should Rakesh put his money? Jubilant FoodWorks or Varun Beverages?
I think Jubilant FoodWorks because I think they have a sort of a better track record in terms of earnings and of late we've seen fairly decent same store sales growth, etc. These were the factors that were troubling them in the past. But very honestly, it's trading at very high valuation. So actually, if you were to ask me from that perspective, I really wouldn't buy into either. But between these two, I prefer Jubilant FoodWorks.
Okay, well, let's take a query from Raj Lalwani. He's asking about Welspun India, whether or not someone should hold it right now and what is the right time to buy. If you're looking at the right time to buy, perhaps I should take a check on the technicals. The stock is currently trading about 0.8% lower. Vikas, on the charts, would you recommend a fresh entry into this counter?
Well, still he has not bought it, then he should wait for some more time because we believe the stock is just trending between this 56 level to 60, 59 odd. So unless until the stock does not give a clear breakout above the 61, which is the 200-day average, the stock would continue to remain languishing around at these levels. So better wait for a breakout above 61, then you can keep a stop of around 57, which is the current price, for a higher target of around 71 to 75.
Okay, that's a Welspun India for you. Ujjwal Kumar wants a support level for LIC Housing Finance. As I can see, the stock's already trading above its key moving averages. Vikas, if somebody has taken a position in LIC Housing Finance, it's trading above its 200-day, 50-100 DMA. What should be the first support level that he should watch out for?
This first support level comes for LIC Housing Finance is near to those 485, 490. Because what we have seen is that the stock has seen a steady move from the lower end of the range of 400 and 430, which it achieved in last quarter. And since then, the stock has seen a sustained amount of up move. So at least 38% retracement, even if you do it, of the complete move, the first support area comes near to those 480, 485 levels, which should be a strong support area for the stock.
Okay, so I do want to take up this question because I think this is a lure for a lot of retail investors, Sharmila. Raj is asking about, so his question essentially is there a volatile small cap which can be a multi-bagger in 1 year? So everybody wants to find that 50 crore market cap company that will eventually be, 10,000 or 20,000 or 30,000 crore market cap company, right?
But don't be in a hurry to make money.
So, but then that doesn't happen in 1 year.
Because it's equally risky.
It is, and it certainly doesn't happen in 1 year, right, Sharmila? So how does one look at finding something, first of all, like this? And what advice would you give them in terms of what return they should expect in a year?
So one great advice that someone gave me and which I can pass on is that you should study companies for the fun of it. So I think, that's the sort of starting point where you start reading about companies and businesses simply because you are interested. And hopefully you will come on an idea that will give, which can pan out to be a multi-bagger. But, I don't think that when you invest, anyone ever knows that this is, that what kind of returns the stock can give you. One can only hope. And very honestly, at this point in time, nothing really comes to mind, which is a small cap and is volatile and can give multi-bagger returns. I hope if he finds it, he can share it with us and we can also look at the idea.
All right.
Well, it's always good to do some bit of homework, Raj. If you've got a longer term horizon, you can look at companies which have been financially doing well in the past few quarters. Do some homework, look at their results. You will find everything on the stock exchange's website or on company's website. And accordingly, then you can come up with a list of stocks and we can try and help you out with our technical experts. Okay, let me move on. Let's just pull up the stock of Z Media. I just want to check where it's trading. Lohit has written to us. He's holding the stock stock at 17.9 for the past few weeks, and he wants to know if he can exit, book losses, because yes, this current price is 15 and his buy price is 18. So Vikas, would you suggest him to hold on, place some stop loss here, or just exit at current market price?
The stock has made a good bottom near to those sub 12.5, 13 levels, and it's seeing good amount of up moves. So now it has been showing some amount of time-wise correction. So if you want to keep a stop, as you can keep a stop near to 13.3, 13.5, which is the complete 50% move of the current juncture from 12 to 15. So you can keep a stop of 13.3 from current levels and wait for some higher target near to 18, 18.5, which would be his initial purchase price.
All right, well, it's that time of the show where we slip into the rapid fire segment. I'm going to just remind both our experts to keep their answers as short as possible. One line with your recommendation will do. Let's take a question from Bhavesh Jain. He's asking about Bhansali Engineering Polymers. He's already invested, but he's losing significant ground. Sharmila, he bought at levels of 160. The stock is currently at 73. Should he hold on to this investment?
I'm sorry, I don't cover this.
Okay.
Okay, Vikas, technically, from a shorter term horizon, what's looking better on chart, Infosys or TCS?
Infosys is a better stock because we believe the stock is trading near to its all-time high. So there is a lot of more scope that the stock can revisit and trade again back. So Infosys looks pretty comparative than TCS.
Okay, just point out to Bhavesh, we'll try and get an answer to your question. Meanwhile, Niketan wants to know from you, Sharmila, for the next 3 to 5 years, Ashok Leyland, is this a good level to enter, and should he hold on to this stock for 5 years or so?
Yes. Yes, I think if you have a 3 to 5 year horizon, this is a great price to enter into the stock.
Sharmila, by any chance, do you track a company called Quantum Papers? One of our viewers, Sandeep Sharma, wants some view on that.
No, I'm sorry, I don't.
Okay, very quickly, Thyrocare, Apollo Health, Bajaj Healthcare, which is the best for 5 to 10 years? This is Shalom Ranga's query. Sharmila, that's for you.
I think Thyrocare.
Okay.
Okay, pull up the chart of Neela Infrastructure. Vikas, I'm going to come to you. Raja wants to know what's the best entry price for the next 6 months with regard to Neela Infrastructure.
Well, the stock has been trading in single digits and I don't closely track it, so may not be able to provide any comment.
All right, so Emil has got a very specific question. Emil, I'm going to have to pull that up and find the regulation and tell you what that is all about. In the meanwhile, let me take a short-term query. Harsh wants to know about L&T Finance. Vikas, do you have any recommendations for him?
Well, in terms of L&T Finance, this stock has been trending between this 145 to 155 band. So if it carries near to those 139, 140 levels, it could be a good buy because this stock has strong support near to 135, 136 on an immediate basis. So you should buy in declines near to 141, 142 for a target of around 154 to 155.
Okay, just one last query on Honeywell Automation. Sharmila, I'm going to come to you. Somebody has been holding the stock for last 3 years. He wants to know if he can sell or continue to hold at current levels. Honeywell Automation.
Yeah, I think you can continue to hold, and this is one of those MNC niche sort of plays. So it is trading, I think, close to its sort of a high, but I think you can continue to hold.
All right, well, on that note, that's all we have time for on this edition of Ask Peaky. Thank you so much, Sharmila and Vikas, for helping our viewers with the queries today. Well, that was quite an action-packed show, wasn't it, Navneet?
Yep, it was, and have a good weekend to all our viewers. But please do tune in on Monday once again. But remember, you can still post your queries. We're just a tweet, post, or a call away. Keep your queries coming, and we promise to address all of them through our shows. And remember, all previous episodes, you can visit our YouTube channel or our website, bloombergquint.com.
Emil, very quickly, if you're still there, we'll try and find an answer to your question. You're asking about KPIT. We'll find
Alex is feeling really bad, and we'll really try to, solve that query next week. Stay tuned. Up next is Power Lunch.